Hello to all traders and welcome to another free live webinar brought to you in correspondence with Orbex. My name is David Kindley and I'll be taking you through this webinar on the benefits of trading stock CFDs. Now, those of you that have joined me before, we've gone through stock CFDs, but I've added a little bit more as we go on to these webinars. And obviously the feedback that you've been giving me week by week has made me point out a few extra details on what you would like to see on calculations, general trading Forex CFDs and also trading stock CFDs as well. So let's get right into the webinar then. So the agenda today, we're looking at stock trading. What is CFD trading? More importantly, CFD stock trading itself and the benefits of trading these stocks. So for those who haven't traded stocks before, let's just take a brief look at what is stock trading and stock CFD trading. So stock trading is basically the basis of trading stocks on an exchange, many exchanges all over the world. And we're buying this when the stock is at a low price and selling at a price suitable for making a profit. So this basically comes down to going to any kind of exchange, trading on that particular stock when it's at a low, and then when the price does reach a high point for yourself, you sell it or close the deal, and then you'll be getting some profit. But CFD trading, this basis means whether the stock is bought or sold, a profit can be made either way, and the CFDs are treated the same across the board. Forex indices, commodities, etc. So I've just got an example of British Petroleum, BP, on my MT4 test platform. And what I want to just show you here is I opened this a few days, well, no, I opened this today actually, just a small lot size. And whether it went up or down would depend on the buy or sell that I'd be profitable in. So as you can see here, I opened it at 371.09, 375.41. It's a buy position. So naturally, I'm up 57 pence because it's quoted in pence and pounds for British Petroleum because it's a UK stock. Now we'll get into these UK, US and European stocks shortly. But I just wanted to give you a quick look at what I was looking at today. I'll just get the chart on as well. So it just looks a little bit easier. So I'll just go to the 30-minute chart. So it's a little bit easy to see. So as you can see here, I opened it at this this position. Just zoom in. Put the candles on, it'll be easier. And then it's gone up to here now. So that's why I'm in a profit. So that's the difference between trading CFDs and trading stocks on an exchange. So if we look at stock trading in general, so stock trading is related to buying and selling of stocks, shares of ownership in a public company. So public companies are firms that wish to share ownership with individuals and institutions as they raise capital by going publicly listed, and this is also known as IPO. What is an IPO? Well, it's an initial public offering, and basically at a stock launch or when the company goes public, it's an offering in which shares of a company are sold to investors, traders alike, retail traders usually. An IPO is typically underwritten by one or more investment banks as well, which is quite important. So that's what every company hopes to achieve, becoming an initial public offering and then being able to sell their shares publicly listed. Stock traders who believe the company will grow at pre-IPO time buy shares at its lowest level. So let's just take a quick look at an example, because there's many stocks that we can trade on at the moment. If we look on Tesla, which is a very big company at the moment, got it on the 4-hour chart at the moment. If we go down back to the weekly chart and we scroll right back, if you can see here, this is the 0 level. As you can see here, Tesla went public in 2010. And if we go all the way back there, we've got a chart until 2011. But as you can see here, it was worth pretty much nothing until it started spiking roughly at 2018, 2019, where we saw this $100, $200 spike. And then since then, we've seen this, immediate ascension to the upside. And it doesn't look like it's going to slow down anytime soon. So that's when to jump on an IPO, but obviously it's speculative to say the least, because we are looking to see what's happening for the IPO as well, and if the company's going to go well. So that's what I want to just give you an example about. Stock traders believe the company will grow at this time, buy shares at its lowest level, and then obviously sell them at a very high level or keep them for whenever they want. So investors negotiate an exchange price which they wish to sell, given they are satisfied with their returns. What is stock CFD trading? So we are speculating on the price of a share without taking ownership of the company. It's very important to realize that when you open a trade, so I've opened this British Petroleum trade of 10 lots, I'm not actually owning any of the company. I'm just owning this contract that I've opened with my broker, which is Orbex, and I've made a slight profit at the moment. So if I want to keep that open, it's up to me, or I can close it and make this profit, and vice versa. If you open a sell position and the price goes down, like I explained just a minute ago, then we'd be in profit as well. So it's very important to note that we're not taking any ownership of the company. Bought and sold on the dealing platform provided by Orbex, can make profits if the price goes higher or lower, and traded on leverage, which we'll go into shortly. So let's just take a look at some of the margins then, and what we're looking at when we're opening and closing a contract. So the margin is basically, as any CFD trade, this is how much we need for the margin. And if we give this example here, yeah, I won't go on to my other test yet. I'll just give the example here. So British Petroleum, we've got a UK share. So this is actually quoted in pounds and pence. It's not £371, it's £3.71. So I'll just give you a quick, get our trusty calculator out as we usually do. So if we do 3.7109, £3.71, we don't really have to put the extra 2 digits actually, because it's not really necessary. We multiply that by the margin requirement. So the best way to look at a margin requirement is to right click on the specification on the stock, and then we go here, margin percentage is 10%. So if we put that into a calculation, we multiply by 10, this is a 10 percentage, which equals 0.371. Now we multiplied by that by the amount of lots or shares that I've opened. So this is multiplied by 10. So we're back at 371. And now the last thing we need to do, because my MT4 base currency is in dollar, as you can see here, this is in pounds. So we just need to convert this pound amount to dollars. And the best way we can do that, if we go to what the pound dollar rate is at the moment, 131.63 approximately. So 1.3163 approximately. So 4.88. As I say, we don't really need to take the extra digits off because we're just dealing with pounds and pence. And as you can see here, 488 is what we have as a margin. So the example that I've given here is for pounds. Given just a little example here for an Apple share, because it's in dollars. So let's just see the example that I've given. So one contract of Apple, so $120 is worth one Apple share, and we multiply it by 1 because we've taken one contract out, and we've divided it by 5, which is also 20%. So it's important to note that when you're looking to take out or open a contract, always look at the margin specification. This one is at 15%. So this will be a little bit different if I open a margin, a Apple one. I put it as 20% as an example, but this would be 24%. So if we open a live trade for Apple at the moment, we'd have, let's just go back to our MT4 platform. So Apple is worth 163. So as you can see, when I did this example, it was a while ago because it was only worth 120 then. So let's just do that. So 163 multiplied by 15% and times 1, which won't change the amount. So $24.45. I won't have to do any other conversion because my base currency is in dollar and this is a dollar amount. So this is the whole point of the margin. And then we'll go into P&L calculation shortly, but for a simple mathematic equation, we've got the open price minus or plus the close price, depending on your profit and loss, times the contract size, and that will give, and times the lot amount, how much amount of lot size you've opened, and that will give the P&L. So let's just look on this. So UK shares quoted in pounds and pence. It's very important to understand this because for European shares and Apple shares, Apple is $164. Alphabet, also Google's parent company, $2,707. These are all dollar Pepsi, $161, Nike, $129, etc. As we go up to the European stocks, BMW, this is 77 euros, Adidas, 213 euros. But as we go to the British shares and stocks, this is quoted in pounds and pence. This is £3.75. This is £16.14. And you get the general idea. So £1.27, £9.03. As I said, we're just looking through what we're seeing at the moment as pounds and pence. So let me just go into my other test account, which I believe I've opened another British Petroleum. This is the one. So I've opened another British Petroleum trade, as you can see, a few days ago on the 14th. So let's just take a look at the margin for that at the time. So we've got 3.7580. And the other thing you can do, if you think you're making a mistake when trying to work out the margin, if you do 375.80 and then multiply that by 10, which was the margin percentage, as you can see, we're on £35 here. It doesn't really matter what the lot size is. We're very over the $4.67. So that's just one way you can tell that you might have done the calculation incorrectly for UK shares. So £3.57. As I say, we don't need to put the 80 on because it's just pounds and pence. We're going to multiply that by the 10% margin requirement, and then multiply that again by the 10 lots that I've taken out. And we've got 357. So if we just go back to BP, there's just something else that I want to show you as well. We also have the minimum volume as well. So it's important to understand that 10 is the lowest that I can take out. So if I wanted to open this again, I couldn't at the moment because the market is closed. However, if you put a 1 in, as you can see, the market is grayed out here. So the minimum I can start it off is at 10. So if you are looking to open some shares and the order box is grayed out, then just know that the volume amount is invalid. So as I said, even if I put in 15 at the moment, the market is closed. So it's important as well, excuse me, important as well to know that the specifications are quoted on the bottom, and this is in line with your broker's time frame. So with Orbex itself, these are the times that the UK market is open. There's a short break at 3 p.m. for 3 minutes, and then it continues until 7:30, and then it will open again the next day at 11:02. So this is another reason, you just have to take a look at what is the session time, so there's no surprises in there as well. So like I said before, just move this out of the way. So we are looking at the moment at what at the margin. So I'll just go through this again because it's a different trade. So £3.75 multiplied by 10%, which 0.1, which is 10% margin, times 10, which was is the contract size. And then, as I said, because my MT4 account is in dollars, I'm going to multiply that by the pound dollar rate, which is approximately 131. Obviously, I opened this like a week ago, so it might be a little bit different, but the results will probably be roughly about the same. So 467, 467. As I said, you can take the last 2 digits off because we are just trading in pounds and pence. So back to just some examples I want to give on margin requirement and P&L calculation as well. So as I say, we've been through the margin requirements now. As you can see, I've given this example of 398.43, which is broken down to 3.9843 notional value, times 10, which is my volume, times 10%, which is the margin requirement in percentage. And then at the time, it was 136 when I gave this example, which would give me the margin. Now, the P&L calculation, we're going to go with the difference between open and close times the volume, which is 10, and that will equal the P&L in pounds. So let's just see how that works with the live trade that I've done at the moment. So we've opened at, we've got a buy position, we've opened at this price, and currently it's 375, so it's a lot higher than what we're looking at the moment. So 3.75 minus 3.57, which is 0.18 times by 10 lots, 1.8. And then again, this is in pounds, so we have to convert to the approximate pound dollar rate, 2.35, 2.32. So as I said, it just depends on what the pound dollar rate was at the time that I opened this trade. So it could have been a little bit lower than 1.316. It could have been 1.312 or 1.3009 or something like that. But you get the general idea. So just remember that you always have to convert depending what your base currency is. Currently with my demo with Orbex, it's with dollars. And that will be the reason why there is a bit of a difference with the P&L and the margins for pound trades. So now let's move on to European trades, or we could just do another quick example actually, because I just want to show you that some stocks, even if they're the same region like the UK, AstraZeneca, Royal Mail, we've got a margin requirement of 20%. So let's just show you that now quickly. So it's always, let's just go to AstraZeneca. So right click, specification, and as you can see here, the margin percentage is 20%. If we go to Royal Mail, the other example that I gave, and right click, specification, and 25% is the margin percentage there. So I've just got a live question at the moment to ask me, is it, so all margin percentages can be different no matter what the currency in the sectors? Yes, that's correct. So as I'll give the example now, we've got 3 stocks in the same, in the UK, in the same region. One is for 10% margin, one's for 20%, one's for 25%. So the margin requirement will pretty much work out the same. We're going to go AstraZeneca 8852, so this is £88.52 times 20 lots. That's what I opened it up as the example, times 20%, which is the margin requirement, and then approximately multiplying that by the pound dollar rate as well. So let's do that quick calculation so we're not missing anything, because I don't want anyone to miss anything. So 88.52 multiplied by 20 lots times 0.2, which is the margin requirement in percentage, gives me 354. And then we want to multiply that by well, at the moment, 1.31 is the pound dollar rate. So this would be the margin requirement. So as you can see here, the more value that the company is worth, that the more margin requirement you will need to open a trade. So as you can see here, BP is 3.95 and AstraZeneca is 88.52. But going back to Royal Mail on this example is £4.32. So again, it will be the same thing. And I've opened a 35, well, as this example, 35 lots, 25% margin requirements, and then pound dollar rate is the margin. And as a P&L calculation, again, it'll be the open and closed times the 20 lots and then times the rate. So let's just quickly do that calculation again, so you're not missing anything. So 88.52 minus 88.28, so 0.3. And then we're going to multiply that by 20 lots as the example, and then multiply that by 1.31, which is the current pound dollar rates. This would be the margin for AstraZeneca. And also the P&L works the same way. So it's pretty much, sorry, that was a P&L calculation, sorry. And it's pretty much the same as all the stocks here. So the only thing is with UK shares, just bear in mind it's quoted in pounds and pence and nothing more. Because if we go into the European shares, we're seeing that notional value is in euros and works differently to UK shares. So example, Adidas. So we've got an example here, 233.45 equals €233.45. So the margin requirement would be the notional value of 233.45 times one volume, just open one volume only, and then times the margin requirement, which is 10%. And then the only other thing now is we're multiplying it by the euro dollar rate because it's in euros. So let's just give a live example here. So I'll just close this. I'll open my other test account that I had with the I think it's the wrong one. Let me just get the right one. Okay, that's my BP. Just bear with me one moment. I know I've got it here somewhere. I've got many demo accounts with many examples on, so just making sure that I've got the right one to show you. Here we go, Adidas. So as you can see here, what we're doing now is we're going on to European shares. So Adidas, we need to right click, and we're looking at the margin calculation again. So this is margin percentage, so 10%. So what we're going to do here is put the notional value, so 208.81. We're going to multiply that by 5 because that's the lot size that I've taken out. And then we're going to multiply that by 10%. So that's 104.40. As you can see here, there's a difference of 114. This is because, again, this is in dollars, this is in euros. So now we need to go to the euro dollar rate, which is approximately 110. Again, I did open this a couple of weeks ago, well, last week, sorry. So let's just see how close we are, 110. So 114.84, as you can see, it's just slightly off because probably this wasn't the exact rate. It's probably 1.10 or something like that. But you get the general idea, take the last 2 digits off, and this is how we get the margin. So just important to remember that UK shares were converting with the pound dollar rate. Euro shares were converting with the euro dollar rate, and with the dollar shares, we're not converting anything because this is in dollars. So it's just important to remember that as well. So let's just take a look at a couple of the examples here. So P&L calculation will work just the same. So we've got here for Adidas 3.87 times 10 and then times the euro dollar rate approximately, which would equal the P&L. So let's just again take a look at the live example that I've got here. So we've got the market is closed now. Again, if we just look at the specifications for the euro shares, something I just forgot to tell you. So again, we've got different quotations, different sessions than America, because we're in Europe as well. It's actually pretty much the same amount, same time zone as the UK, because it's the European session. Obviously, the UK is in Europe, not the European Union anymore, but is in Europe. So we are looking at the same time frame. So just something to remember, because again, if I wanted to open an Adidas trade now, I wouldn't be able to because the market is closed. And again, just look for the fact that I can open smaller amounts because the contract size is 1, which means I can go all the way down to 1 and not 10 like BP or other trades as well. So let's just take a look at the P&L. So we've got 213.57, which is the current price that it stopped at because the market is closed. And then we'll minus 208.81 because that's the current, that's the price that I open it as. We're going to multiply by 5. That's the lot size taken out. And as you can see, there is a slight difference with the P&L. So at the time, I'm going to put times 1.10. And as you can see here, 26.18, 26.23, 5 cents difference. And this is probably because at the time I opened the trade on the 14th, which was actually last week, the euro dollar trade price was just slightly different, but you get a general idea that you just have to make sure that the P&L and the margin is all in dollars converted because the base account is in dollars. Let's just look at another example that I've given for Lufthansa. Again, as you can see here, Adidas has a bigger stock value of $233. Lufthansa has 786. So again, the P&L, the margin will be a lot less than what Adidas will be. And another example I just wanted to give, that Lufthansa's margin requirement percentage is 30%. So just something else to keep an eye out as well. So let's just take a look at that. As I said, I'm going back and forth because I don't want anyone to miss anything. I want to be very open and transparent with my webinars and the examples that I'm giving, so there are no confusion. So as you see, margin percentage 30%. So anytime you open a stock or see any CFD, you can also always check the margin percentage because we are looking at that. Just been asked, I hope you will share the slides after the session. If you send me your email address, I'll be able to forward them on to you. And obviously any questions you may have about any of the webinars, then let me know via email. I'm happy to connect with you and to answer any other questions that you may have. So, as I said, please forward me your email and I'll be able to get back to you. So moving on with the presentation as well. Oh, that's the wrong slide. So moving on to the presentation. So you get a general idea with the European shares. If we go to the American shares, very, very easy. Don't really need to give any examples on the NT4 platform, because what we're seeing at the moment is just literally whatever the margin, whatever the P&L is, margin requirement, we are looking that it's just plus and minus, and we see the margin. So given a Netflix example here, currently 571.72, which translates to $571.72. So I took 100 shares out on this example, and then the margin requirement was 10%. So let's just take a look at what that would be. So 571.22 times 100, and then times that by 10%. So that's 5,712. If you wanted to, obviously Netflix, let's just see the specifications for that. So contract size is 1. So you didn't have to, I mean, the 100 was just to give an example of how far you can go. But, you know, you can actually, as you can see here, the maximum volume is 300. And the minimum volume, quite interestingly enough, is a micro lot of 0.10. So that's very good as well. So we've got a margin percentage of 10%. So that's why the example I gave here, 10%. And P&L calculation is just simply whatever the difference is between open and close, and then times the volume. So if we give an example here, 571.72 and the open, and this is the close, 549.50 equals $22.22 times by 100, which is the volume, and that will be 2,222 of a profit. So very, very easy to work out the American shares. I just wanted to go through each one because it can be a little bit confusing when you are trading BP, I was going to say, but UK shares and European shares if you have a dollar base account as well. So that's just something else to keep in mind as well. So moving on. As I say, any questions, please feel free to stop me because obviously as we get more and more into the webinar, then these things will get lost a little bit as well. So just to have a quick recap, UK shares quoted in pounds and pence. Good example here, 398.43 for BP, which equates to £3.98. And then European shares are quoted in euros, which is no different. And then we've got the American shares as well, notional values in dollars. So how is stock trading different to Forex trading? I'll just take a quick sip of water before we continue. So we've got a few points here that I like to just make sure that everything's clear when we're trading stocks. So we've got company versus country. What I mean by this is depending what company you trade on, it depends on that country as well. So if we go to America as a very good example, because it's the biggest economy in the world, when the US index or the dollar is taking a bit of a dive, if it's in trouble, then sometimes the stocks, the big players of these stocks will be could have a bit of a downturn as well. So it's important to know that when you are trading a company, you could be trading the country as well. So it's just something to keep in mind. 24 hours versus 8 hours. So with Forex trading, it's usually 24 hours. It doesn't stop. They're open all hours, basically. They never sleep, but apart from weekends. But for stocks, depending on the country, it's 8 hours. So like we've seen on the Netflix, for example, this is the American session now. As you can see, it opens at 4:30 in the afternoon and closes at 11. But for so I've got so many stocks with Orbex, it's very, very good. Lots of options. But BMW, big European stocks, as you can see here, 11 until 3, like I said before, and then a couple of minutes break, and then 3 until 7:30. So something else to keep in mind as well. Just a quick look at pips versus cents and pence. So with Forex, we're looking at pips, and with stocks, we're looking at cents and pence. As I said before, American stocks are quoted in dollars and cents, Europeans in euros and cents, and UK, British pounds, and British pence. Ex-dividend dates, for stocks are a feature, as the announcements usually makes the stock price drop. Bears are usually in the market at these periods. So an ex-dividend date is when the company is going to release dividends to its clients, and in doing so, the stock price does drop momentarily. And during this time, it is a good period where traders can jump on these opportunities. So it's good if you have a website or look up when the ex-dividend dates are for certain companies, because you could actually trade on these opportunities as well. So just something to look out for there. Okay, different types of trading. Now we're just going on to another course of action now, where we're just looking at how we can benefit from different types of trading. So we've got position trading. Now, what is position trading? It's a long-term strategy where a trader decisively sits in a position for several weeks or even months, waiting for a big price move. So the example that I've given here, sorry about that. The example that I've given here is we're seeing a stock really bouncing, a bit choppy, but in a good ascending channel. So the entry price, I've given an example at the bottom. We've seen a bit of choppiness, a break in the market, which is this gap is a good signal that prices will keep pushing higher. But we've seen a retracement and then another push to the upside, then a retracement, another push to the upside. Now we're seeing exhaustion. And then here is the exit, because as you can see, we've seen a big sell-off. So this usually takes, this is usually takes precedent in several weeks or even months. And this can be very, very beneficial for the trader if they're looking to trade long term. So you can see, let's go back to the Tesla example that I gave earlier. So if we go on a weekly chart, for example, look at, this is basically the position trading. So we've seen a peak and a retracement, and then another peak, retracement, peak. But then we've seen the sell-off now. We've seen the exit out of that. Just get rid of these so it's a bit easier to see. And now we're coming to the downside. So this is a perfect example of what I'm showing you on position trading. So, we're pushing higher. There is a retracement. However, the retracement doesn't last too long, and we are putting good positions in. But when the exit price has taken hold, there is the knowledge and understanding that prices will start dropping lower. And as you can see here on the Tesla example, very, very good indication, very good example as well, that the exit price is here. And now prices are looking to the downside after these recent swings, retracement, and now we're going to the downside. So that is position trading. Swing trading is capturing shorter term moves, usually lasting days to weeks. So again, we're looking on basically a descending channel, a little bit opposite to this. However, the swings in the trades are very powerful because these are lasting for days to weeks. And you can really take advantage of these swings, because even the swing to the upside here can be taken advantage on, because we're looking to swing again and then start falling. So that's what swing trading is. And we're looking on daily to weekly as well. So it's something very important to know on that term, because we're just going to look on a couple of other types of trading as well. Now, this is day trading and scalping as well. So, we're looking at trading styles, and here is just a brief look at, the holding period and the trading style as well. Because again, depending on your own trading style, you could actually master what's beneficial for you and what you are looking at in the near term as well, because it can be very, very beneficial if you get your own trading style, your own take on how long you want to be open for on your trades. Obviously, scalping, we've all heard of scalping, seconds to minutes, no holding overnight, which is quite important. And even day trading is not holding overnight. So we're not putting anything at risk on overnight positions, whereas swing and position trading is a different story altogether. There's also the cancelling method. Now, a lot of people haven't heard of this, but it is quite well known in the trading cycle. And cancelling methods represent 7 characteristics that stocks often share before making price gains. So this is just a brief rundown of what the CANSLIM stands for. So current quarterly earnings, so we've got per share earnings should be at least over a quarter. So in other words, 25% from the most recent financial quarter compared to the same quarter. So if we're going now, for example, we're coming to the end of March, so we're coming to the end of Q1, quarter one in 2022. So if the earnings season is lower than the previous one, then it is a characteristic that the price will start moving a lot lower. Whereas if it goes higher, then it is actually a good indication that it will start moving up higher as well. And annual earnings growth, this should be up over a quarter or 25% higher over the last 3 years. And annual returns on equity should be at least 17% or more. New product or service, this refers to the idea that the company should have continuing development and innovation. It shouldn't go backwards. It should keep pushing forwards. So this is a very good characteristic as well. S, supply and demand. I think we've all heard of supply and demand as, if a product is going to be in demand, can they cope with the supply? Is there no way that there is too much demand and not enough supply? That would be very, very detrimental for any company. So that's very important as well. Leader or laggard. Now, depending on if the stock is leading or laggard, well, over the last 12 months, will in comparison with a lot of the other stocks on the market, will be a key driver for the stock as well. Institutional sponsorship. This basically just refers to the ownership of stock by mutual funds or large institutions that usually do jump on IPOs. And then we've got market direction as well. This is characterized into 3, such as confirmed uptrend, market uptrend, under pressure, and market in correction. So these are basically, the cancelling method is something that a lot of professional advanced traders look at when they're looking at making an informed decision on price gains as well. So just something to look at when we're trading all these stocks in general. So some categories for stocks. So we've got cyclical, growth, value. Just name some of them just to kind of give a brief example of what can be looked at and traded on as well. So cyclical generally follows the economic cycle of expansion and recession. So example there, hotel and airline stocks. So a perfect example, when the pandemic did hit in 2020, the hospitality sector was hit very, very harsh, leisure sector as well. Obviously, airline stocks took a very big dive, detrimental dive down to the downside. So did hotel stocks as well. So basically, we're looking at businesses performing well during economic expansions, but typically experience significant declining sales and profits during recessions or challenging times such as a pandemic. So this is something to look at with cyclical stocks. Growth stocks, companies that are anticipated to grow at a rate significantly above the average. So we've got Netflix and Peloton. So during the course of the pandemic, let me just give you an example. I'm just going to bring Peloton up, because Peloton are a fitness company that did very well during the course of the pandemic. And why was this? Because everyone was pretty much working from home, not being able to go to the gyms. Gyms were closed, leisure center was closed. People had to order a lot of fitness equipment if they wanted to maintain a gym life that they had before. So as you can see here, during the start of the pandemic, which goes to the first part of the chart, we saw this monumental growth. And this was in the space of, 6 months. So we've gone from $26 approximately all the way up to $168. So we've pretty much, quadrupled the share price on Peloton. And obviously, when the pandemic restrictions were lowered, as you can see here, prices started pretty much collapsing. And then this was the second wave of the pandemic in the middle of, well, possibly the third wave, depending on which country you lived in. Prices started going up. But as you can see, this catastrophic fall to the downside has seen over $100 wiped off the share price. And it's pretty much gone back to the amount that it did when the pandemic started. So a very, very good example of how to jump on stocks and how they can be affected by fundamental impact news events and also economic upturns and downturns as well. So very, very good example for Peloton. Now they're currently looking for a buyer because their share price has fallen so low. The example that I gave, the other example I gave as well, is of Netflix. Again, because many people were staying at home more, they probably made more subscriptions to things like Netflix and Disney Plus, Amazon Prime, to name a few of these subscription companies for streaming services. And if you look on the state of Netflix's share price as well, as you move that in, as you can see here, since the pandemic started, so when was it? February, March, April. As you can see here, what a meteoric move to the upside. We've almost doubled its share value, over $600, almost $700 from when it was at $372. But as you can see here, like Peloton, what an amazing decline that's happened with Netflix, as more people obviously are going out more, probably less subscriptions, less subscribers, and now we're moving to the downside for Netflix as well as Peloton. So these are important things to understand when we're looking at these growth companies and how to jump on these opportunities as well. And we've also got value companies, shares trading at a low price, even though the company is in a strong financial position. So Twitter and ExxonMobil, for example. ExxonMobil, one of the biggest oil companies in the world. But if you looked on their share price, you wouldn't necessarily think it, because as you can see here, it's only trading at $82, whereas something like Tesla, $925, Twitter as well, the example that I gave, $37, even though it's one of the most popular social media programs, platforms out there, only $37. So it makes a lot, it makes it a lot more affordable and a lot easier to own Twitter, because they have such a low amount of shares. So like we've said here with Adidas, because this was 208, the margin requirement is 114. But with Twitter, for example, we're going to go, the current price is 37.35, for example, 37.35. Even if I open 50 shares of that times 0.10, which is the margin requirement, it's only $186, and that's opening 50 shares of Twitter. So just something to keep in mind when we're looking at growth stocks, when we're looking at all kinds of stocks, to give us the best opportunities for what we can possibly start trading on as well. So this is just something to keep in mind when we are looking at this as well. So like I said, any questions that you want to fire to me, just please feel free to do so. Very happy to answer the questions as we're going. So how to trade stocks. Now, fundamental analysis is probably one of the biggest drivers. You know, you can go onto any media or news channel or news website, and straight away you'll probably see what stocks that are in the news. You can go to any major publication and you'll see something happening with stocks. And this is the fundamentals that we look at to see the highs and lows and what the potentials are for a lot of stocks. So like I said, now what stocks are in the news, who has the highest value, and what names to look out for. So we've got, you know, Elon Musk for Tesla, Mark Zuckerberg for Facebook, or the Meta universe, like he's renamed it or rebranded his company. These are the things that we are looking for, because Elon Musk is usually in the news doing something, and so is Mark Zuckerberg. The previous CEO of Amazon, Jeff Bezos, he is usually in the news as well. He was once the world's richest man, but got overtaken by Elon Musk, and it's pretty much been a little bit of a war between them two for the top spot. So these are the things to look out for as well when we're trading stocks, because if you're looking to trade Tesla or Facebook, just have a look to see if these names are in the news, what they're doing. Have they had a share price fall? We saw Facebook recently, which reminds me, have a big sell-off because they missed subscriber growth for the first time in a long time. And as you can see here, look at the huge gap in the market here that we saw just because of the sell-off in price because of this earnings subscription miss. So fundamental analysis also goes with earnings season. The earnings season begins at the beginning of every quarter, and there are earnings season calendars on the internet, which is easy to find out when you're looking to trade a big stock such as Facebook. So if, for example, you had a stock, you want to open a stock of Facebook, the earnings season was here. This was on the 2nd of February. The earnings miss. If you open a sell position roughly even about here, even about in this area, about the $300 mark, you don't even have to wait till it goes to $322, $300, leave your position open maybe a couple of days, and then bang. If you had an inkling or you had a thought that there would miss subscriber growth, you know, $241. And let's just have a quick P&L check on that. So let's just say 300 was where we wanted to open it. So that is roughly about here. And then we minus 248. So $52, depending on your lot size. Let's just say we took 10 lots out, over $500 would have been made on that trade. And obviously the margin requirement isn't that bad because you could have opened, you know, for roughly about $100 margin that you would need, this profit would have been achieved. So as I said, fundamental analysis is pretty big. Earnings season is very, very vital for a lot of companies. You know, earnings misses, earning growth, subscriber numbers, etc. These are the things that we have to look out for as well. So this is how to trade. This is my definition of how to trade stocks, because fundamental analysis is key. You can do technical analysis as well, but especially now, a lot of the stocks are driven on fundamentals alone because of the amount of news that is out there at the moment. So this is just something to keep an eye out on as well, to give you the best value for what you can see. So I just got another live question at the moment. So asking what's the best correlation between the CEOs and the companies? Well, you know, the CEOs pretty much drive the companies. If we look at Elon Musk, for example, he's usually in the headlines for saying that even his own share price for Tesla is too high. He does stock splits as well, which is very important. Stock split is just something that gives the trader more chance of owning the stock because it would fall in value, but will still remain the same amount. So, you know, Elon Musk especially is someone to look out for, because he usually does start shaking the market up pretty violently on his side. Mark Zuckerberg as well, just another example, when he did say that he's changing his platform to the Meta universe, this shook up the stock a little bit as well, because it's such a big company and it actually is still looking to start recovering. So from the big subscription loss that we had here. So as you can see, a slight uptick, but now we're going to be looking at other fundamentals for Mark Zuckerberg as well, and Facebook itself, to see if they can get back up to where they were before. So if we're looking at technical analysis, a lot of traders will start looking to fill the gaps and do a V-shaped recovery. So at the moment, we've had this detrimental downturn. We've hit a bottom, as you can see here, very solid support line. And now we're looking to start moving higher. And when the technicals come in, depending on what indicators you're using or anything like that, the main thing would be to break this previous open price that we saw after the gap. If prices start breaking here and moving higher, there'll be an expectation in the technical analysis that would cover the whole gap and start moving higher again. So this is like a small, brief technical analysis there, where a lot of traders prefer to use that rather than fundamentals. However, fundamental analysis is something to keep an eye out for, because stocks are usually, especially the big stocks, are usually in the news quite often. So just keep an eye on that as well. And as we close the webinar, I'll just go through the final slide. So why build a portfolio? So when you're building a portfolio of stocks, you know, we're looking to diversify. So we're looking to invest more broadly into more industries. So for example, if I just pull up a handful of stocks here, you know, excuse me, we've got Airbnb, you know, that's hospitality. We've got UPS, big delivery company in America. Yeah, we've got AON, again, looking to move on into that field as well. We've got Expedia, big names in the stock market. Zoom, you know, VoIP, voice over internet protocol. Activision Blizzard, this was a company that was making computer games, recently bought by Amazon, Microsoft. So, you know, this is risk, this is diversification. Nike as well. This is just to name a few. If we go to European shares, you know, we're looking at BMW, the motor industry, Cineworld, this is the cinema chain. Go to UK shares as well, AstraZeneca, pharmaceutical, Barclays, which is banking, HSBC banking, Shell is petroleum, along with British Petroleum, BP. So this is what we're looking at with portfolios, diversify. So you're not just doing, you know, BMW, Volkswagen, Tesla, which is all motor. You know, if the motor industry goes down for some reason, then you lose you know, funds on a lot of shares, depending if you're in sell positions, of course. So this is what we mean by risk diversification. And also trade assets or instruments, stocks that are more relative or interesting or inspiring to you. So if you're opening a stock on Royal Mail, you might not be that interested in a mail delivery company like UPS, like DHL. You might want to invest more in Activision Blizzard that make computer games, if that's something you're interested in. Tesla that obviously make electric cars, electric vehicles, which is, you know, quite interesting as well. But do something that is more inspiring to you, more interesting. So you're going to be looking at this stock a lot more interestingly enough, rather than just simply opening something that you're not really too bothered about, too sure about, and then you might have more of a chance of losing some funds because of it. So this is something else to look at as well. And trading at more convenient time periods. So this is on yourself, depending on when you can trade. As we saw the specifications on some stocks. So we've got EasyJet, you know, British company. So this is traded more or less during the European session from 11 to 7. If we want to start trading with American stocks, we're looking at later in the day, 1:30 to 8. If we want to go more than that, Starbucks, Disney, for example, Starbucks randomly, it's 4:30, like I said before, until 11. So this is just something, trade at more convenient time periods so that it can be easier for you as well. So it can be very, very more fascinating, I would probably say, if you've got all these three in connection. You've got a diverse portfolio, you're trading assets that are more relative and interesting to you, and you're trading at more convenient time periods. So let's just have a recap on the slides, just so that we are up to date with everything. And as I said, I'll be around for a while longer. I'll stay online just to answer any questions that you might have. So as I said, stock trading is a little bit different to CFD trading. CFD is where buying and selling a contract, not actually owning a physical part of the company itself. And a lot of stock traders are looking to, you know, jump on these IPO, these investment opportunities before they really start taking off, a little bit like the Tesla example that I showed you recently. You know, and what is stock CFD trading? As I said, bought and sold on a dealing platform provided by Orbex. We do not take ownership of the company, trade on leverage, and we can make profits if the price of the stock goes higher or lower. Calculations we just briefly go over. So as I said, just to remind you, not like European and dollar shares, UK shares are quoted in pounds and pence. Like I said, BP, for example, 398.43, which equals to £3.98. European shares, on the other hand, are basically laid out like they are on the euro amount and dollars as well. So Netflix, for example, $571.72, and that's $571.72. I've got the margin and P&L calculations is there. As I said, I'll share these slides afterwards if you provide me with your email address, and I'll be able to send them to you. And if you've got any questions going forward, I'll be happy to connect with you and go through them as we go on these free webinars. Stock trading to Forex trading. So we've got company versus country. As I said before, you could be trading the company and the country. Forex trading is mainly for the country itself. So if you're trading on euro dollar, pound dollar, for example, then naturally the eurozone and the pound zone, which includes the UK, which is basically the UK, this can affect the Forex, but the company is affected by the price of the company as well. 24 hours versus 8 hours, pips versus cents and pence, Forex is in pips. American stocks, as I said, are quoted in dollars and cents, and euros and cents, and ex-dividend dates, something to look out for, as it usually makes the stock dive lower. Position and swing trading we just looked at as well. Again, I'll be able to share these slides with you. Day trading and scalping, and there's just a table there of the trading style and holding period. And then we've got the canceling method. Not a lot of regular traders use this, but a lot of advanced industry experts do look into this, these 7 characteristics before they go into a trade, and this before a company starts making gains. Some categories of stocks, as we just brushed through: cyclical, growth, and value, and just looking at fundamental analysis, which is what I heavily look at when trading stocks. And why build a portfolio? Well, you know, this is what we take into account, you know, risk diversification, trading assets, and trading at more convenient time periods. So thank you so much for your attention. Once again, this will be a weekly free webinar. The next webinar is about, that I'm going to go into, is roughly about what we're looking at in the trading psychology, which looks at how traders can get into trades, how psychological it can be, and what stops a trader from, you know, cementing those profits and making those guarantees. A lot of people say that 80% is psychological and 20% of the trade is opening and closing, which is quite true, because 80% of the time, a lot of traders are just looking to see when the next available opportunity is, and that's a very, very big psychological hurdle that we have to get over. So I'll be looking into that and much more stuff as we go into the next webinar, which also covers risk management as well. But next month, I'll be going over things like Elliott waves and harmonics and how to trade them. So stay tuned for when I'll be advertising those, and we'll be looking at what we're going to as well. So as I said, any questions, I'll be around for a while longer. If you want to ask me for anything, I'll ask any questions, and please provide me your email address if you'd like me to send you the slides as well. So once again, thank you very much, and bye for now. See you next time.